Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. What's up, everybody? Hope you're doing amazing. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. We are going to do what we do each and every day, looking at 10 to 12 futures markets from an educational perspective, identifying both breakouts and reversals. After yesterday's moves, we rallied back a little bit from the market's sell-off, and we came really close to an entry from yesterday's DMC. So let's go ahead and talk right through that one. First of all, if you're new to the channel, do me a favor, click the subscribe button. If you've been here before, a much appreciated like would be more than welcome. It's great to give me a thumbs up, kick that little button there down below, and that'll help me to let the algorithms know that people watch. All right, let's get going. So the S&P this morning, we're up 11 points, continuing yesterday's strong rally. Now, with yesterday's rally, we came really, really close. I mean, you can't get much closer to an area than having an entry right up in here. Now, with that level coming so close to being hit and not getting filled, you have to think of this now as a confirmation entry. Now, truth be told, we were actually looking at this as a confirmation entry earlier in the day. And the reason we were looking at it earlier in the day was because of this basing that we started to see in front of the level. So, one of the things that people do is read the trade updates. So the trade update that was in our latest daily market commentary was that ES and NQ are both basing below the level from today's DMC and yesterday's trade update. Make sure it still fits your risk criteria before entry, remembering our rules around basing. So the point behind that is that we had a lot of basing here in front of the level, and it didn't give us a 2-to-1 reward to risk. I'm okay if I get a 2-to-1 reward to risk. I don't necessarily have to have 3-to-1, and so the reason why I have a 2-to-1 reward to risk is because it still allows me to get into the position. And when I look at this, that's a 1-to-1. Here's a 2-to-1. It was right at a 2-to-1 reward to risk. So if somebody's a little bit more conservative and that 2-to-1 reward to risk isn't enough, then you definitely already want to have switched it to a confirmation entry. Now, we came really close to it. Wouldn't have been filled on a limit entry anyway, and so that definitely means that it converts to a confirmation entry. So that's how we do confirmation entries, is that we look for we have reasons why we would convert that over. And now we are in the level, so the confirmation has not yet triggered. You want to trigger halfway through the level. So at about 28.91 would be the area where the confirmation would trigger, that would say, okay, this trade is now active. And right now we just don't have that as of yet. So that's what I'm looking at in the S&P. NASDAQ, very similarly, we have a very similar setup with the NQ level that we identified from yesterday. Now, if we do get a pullback, when I look at this on a 4-hour, our 4-hour trend has not really changed yet. We have a higher swing high. We have a higher swing low, but I don't have a higher swing high. Technically, you might consider this the beginnings of a higher swing high, but I'd need to see a bit of a pullback to finally confirm that. So what I'm looking at now is we're still technically, we still have our downward trend, and that's why if you want to jump into it, you can. But if we roll over from here, where's our next stalling point? Could be somewhere down in this region here, where we have that wick over wick area. And then if price breaks through there, the next level of supply, there's one right up in here, and then the 15-minute right up in there. Next, crude oil. So crude oil has leveled off ever since its huge sell-off a couple of days ago. We haven't really had a lot of great trade opportunities in it for the last day or two. Looking at kind of what we have at the moment, in the overnight hours, we've really done a whole lot of nothing. And this is not always the best setup for a breakout. So sometimes this trade setup is good for a breakout where you've got a lot of this basing. I don't know that today this makes as much sense, primarily due to these wicks that are all popping up around in here. So a lot of those wicks make it a little bit more contentious, if you will, for me to be willing to jump in. Now, on a 15-minute chart, we do have a little level here that might be an effective entry. So I'm going to highlight this one in here. So is there a chance to trade a breakout up to that level? Yes, technically you could probably trade a breakout long above here up into that region if you are so inclined. But that's where our next kind of reversal area would be. In gold, we've just continued to move higher after our touch and go entry here. If you caught this entry, then you've really been happy with the move. And if you missed that entry, you might have another shot right in here. Now, this is not ideal since we've already touched this area once, but that would be the next level that I would look at in this zone, would be this level right in here. It's already gotten one touch, but it was just a touch and go out of the zone. And so you might want to use that as a confirmation entry, but that would be our next reversal level in gold. Bonds and currency markets. So in our ZN trade, we had set up a potential breakdown level, did not break below that, actually popped back up. And now we've actually got another breakout area up in here. So we're kind of in between both of these regions. Both of them could serve for potential breakout areas. In the Aussie, we have a bit of a speed candle move down right here. And that speed candle, though, occurred, at right around 9 o'clock, so it was closer to the Aussie market open. Now, when I'm looking at this, we've got a nice little retracement back up to the middle of this speed candle area. This is really where you might actually get a candle-to-candle opportunity in here. I tend to look at speed candles as retracement points, and if we use the speed candle as a retracement point, it's here. But we may only make it 50% of the way of the retracement. That's also common. So I think you can do either one, either candle to candle if you want to get in before, or wait for the reversal up into this region. In the euro, yesterday we got a little bit of our breakout in the euro. Part of our trade update was to move that stop fairly quickly to break even, as price then came right back up into the break-even area, and then even popped above it. Now, technically, if you're looking at this, you might place your stop above this pivot high, and technically there's been no stop out yet, but it definitely then 1, 2, 3, 4, 5, 6 at the very least violated the 6 candle rule. So this one's a stop out for a small loss, no matter how you slice it, if you follow the rules. And so this one, you're going to get those from time to time. But it was a worthwhile shot to take that short, because the big picture, that would have got us back to this next move down. Now I've got a higher swing high and a higher swing low. If we reverse off of where we are and continue to trade higher, if these levels get broken, then I think there's room for price to continue to run. Do need to be aware of this supply up here. That's the only reason why I wouldn't take this. Looking at this, I would take this as a breakout if it wasn't for this supply and this supply. It takes away my room to roam. So, certainly I still have this area here as long as we base in front of it as another breakdown candidate potential, and another reversal candidate area right up in here. So both of those levels are still valid and very much in play. Canadian dollar, the Canadian dollar we sold off pretty hard yesterday and did not really come back up, give us any sort of an opportunity to get back in. The retest of that level of this little wick over wick area was right here, so I don't love this due to that retest. So I would put your potential reversal right here. We are coming close to a demand area. So when I look at the 4 hour, on the 4 hour side, what we can see is that we've got a very strong downward trend, and we are coming into demand. And when you come into demand when your big picture trend is down, but you're looking at a demand zone, you're better off looking for confirmation entries because you're going against the big picture trend. So keep that area in mind as a confirmation style entry. Next, Great British Pound and Japanese Yen. So the pound is really just sideways action. Not a whole lot of activity here in the Great British Pound. We do have a little bit of a slightly upward trend, but that upward trend is not super strong. So this is not, I certainly don't make trade decisions off of trend lines, but it's easy to see kind of what it looks like. When I go to the 4 hour, this just looks like a bear flag, right? When I go to a 4 hour especially, it looks like we've kind of created a bit of a bear flag pattern. And so the better opportunity to me is going to be that breakdown short. Now, if you don't know exactly where to get in, and this is the hard part, right, is when people say, well, I feel like it's going to go lower, I just don't know exactly where to get in. That's where options can become a very viable tool, because you can be a little bit more speculative and give yourself more wiggle room to be wrong. Next, Japanese yen. So looking here at the yen, we see that we have this big, long speed candle area, if you will. The price has kind of just stayed in between. And with price staying in between that level, for now, I don't want to trade anything inside of that level. I want to wait till price exits out of one of those levels, because it's going to give me a higher probability. So we have, a lot of this is reactions to prior market moves. And so knowing how the market has reacted in the past to these levels can kind of help us to see what may happen going forward. And these levels that we have kind of identified, that's why I've got a lot of confirmations. Yesterday was not a day to force a trade, and I know it was tempting to force some trades, but it was not a day to do so. Monday we had our huge movement. Yesterday was a little bit of a reprieve of that, but overall our big picture is still a bit bearish. There's a fair amount of fear out there, but I don't feel like there's a crash atmosphere. So we'll see what happens today in the markets. We've got our confirmation entries in place up above us in our major indexes, and then certainly for our crude oil, what's going to happen on that zone is important to look at. So if you are a subscriber, tonight we have our live Q&A session, so please make sure you have your microphone ready. The idea of the live Q&A sessions is that we get to chat and share screens, and you bring your trade ideas in. So if you are not a Traders Army member, go to tradersarmy.com today. There's a promo code on the site you can use to take a look and take advantage of 60% off. So go to the site, learn a little bit more. So I will hope you guys have an absolutely amazing day, and I will talk to you soon.